My name is Spencer Fortek. I'm a multi-office practice business owner and have been for over 20 years. I'm the Arla regional representative for Kent. Arla, for those of you who don't know, is the Association of Residential Letting Agents. And it's the letting industry's leading regulatory body for those clients out there that are looking to invest or are currently investing. Really, you want to be using an Arla agent because it means that you'll have a great degree of protection over using someone who's not Arla registered. One of the key benefits of using an Arla agent, for example, is we have client money protection insurance, which means should the worst happen and a company goes into liquidation, your deposit, your tenant deposit is actually protected in an insurance-backed scheme. I've got personally 20 years residential sales and lettings experience. I am myself a commercial and residential landlord, so I understand very well the trials and tribulations that we go through as landlords, the good times and the bad times. And I've been a member of the National Association of Estate Agents coming up to 13 years. So let's have a look at the changing letting landscape in 2015 and what's really going on in the background. We have government policy that's currently focused on home ownership. The recent Help to Buy schemes are clear proof of that. Our house prices have been going up roughly 9.5% year on year. Our number of housing transactions are up 30%, over 30% year on year. We have a much more strictly regulated rental sector than ever before, and in terms of regulation that's going on, we have most recently introduced the tenant deposit scheme. We have various London boroughs introducing mandatory landlord licensing. Newham, closest to home for us, have a mandatory landlord licensing scheme, which means every single landlord in the borough has to have a license to let a property out. Agents continue to report a massive letting stock shortage. I'm fortunate enough to live in Essex and have businesses both in London and in the Kent regions. So I see 3 regions, 3 counties worth of business. The universal story is that we're all short on letting stock. Whichever agent you speak to, in whichever county you speak to, they're all short on letting stock. There simply isn't enough letting properties to meet our demand. I'd now like to have a look at projected property price increases. And one of the things that really interests me for my career is the why. And I think we can all agree that we're pretty certain that property prices are due to increase. Clearly, we need a crystal ball to completely accurately predict that. But I'm going to be looking at the why very shortly. So if we have a look at this next table, and what I've done, I've specifically looked at some old data, because really I wanted to see how we were performing. And this is data that was running in 2013. And we can see here that the UK prediction overall was 25%. I hope all of you can see the numbers at the back of the room. London 24%, South East running 32%. So this is data that was taken in 2013 for the 5-year period ending 2018. I think my esteemed colleagues who will be talking later can confirm that P14 has dramatically increased and improved over these prices already. So, as I said, I think we can all agree that property prices are going up, but why? What is driving these property price increases? And that's the bit which interests me. Let's put some facts behind the data. So the first thing I looked at was the central London market, because I believe that's the driver behind what goes on in the rest of the UK. And, sorry, the graph is a little bit small, but you'll see that for new central London developments, for new build property, only 19% is owned or bought by UK buyers. Whopping 81% of new builds in London are purchased by overseas investors. Quite frankly, what else are you going to do with your money? The classic car market possibly aside, which is too risky for some people. For people wishing to invest, there's very little alternative. What else are you going to do with your money? If we look at this table, and it shows how your £100,000 will perform over the last 14 years, we can see in the top line that £100,000 invested in residential property, according to the Halifax, using their price index, would produce a return of 132%. Basically outstripping any other way of investing your money. The closest is UK equities, which is running at 83%, but that's nearly half the return you would get with property. Rental returns have gone up, so obviously more people are buying property. Now, why have rental returns gone up? One of the reasons rental returns have gone up, and we'll touch on this in a little bit as well, is the mortgage market review. Now, this in 2014 basically made it even harder for people to borrow money. It meant that lenders were required to assess whether people borrowing money could still afford it. If at any point over the next 5 years, the rates were to go up by 3 percentage points. In addition, there were limits to the multiples of people's mortgage. So basically, in a nutshell, the mortgage market review meant it became harder for people to borrow money. The good news is that this did not apply to buy-to-let mortgages. As a result, our first-time buyers, sorry, the chart has been somewhat shortened. First-time buyer mortgage loans, although it's starting to increase now, are still at an all-time low. It's basically hard for people to borrow money. The fourth reason why I believe that property prices will set to increase is really simple. We're simply not building enough property. The blue line is our annual population change in the UK. So, blue line is population change. Red line is our house building rate. And it doesn't take an economist to figure out that we're building less houses and our population is going up. So, simply put, we're not building enough properties. Now, it's not a problem that's refined to the UK. The global population is increasing massively. In 1950, our population globally has increased threefold, and the prediction for 2050 is that we'll reach almost 9 billion. Currently, we're at 6.8. So it's a situation which is just going to get worse. More and more people, not only coming to the UK, but being born globally, but we're just not building enough houses. So a brief summary. Our property prices are increasing year on year, I think we can all agree that. An increasing number of people simply could not afford to buy or do not meet the lending criteria. In addition, even if you can afford your deposit and you meet the lending criteria, renting is simply a more cost-effective solution for many people. And lastly, tenants are looking simply for quality accommodation in a good location. It's not rocket science. Thank you very much. I know that I've run over, but if you do have any questions, I will be here later this evening to answer those. Thank you very much.